Good morning, everyone. It is 8:20 a.m. Today is August 30th. I have logged into my Thinkorswim trading account, and we're up at the Market Watch, and we have clicked the appropriate tab here, and today's date being the 30th, we have 76 companies that are going EX today, which means they're getting ready to pay their dividends. So if you had bought the stock yesterday or the day before, you would be qualified to get one of these dividends as long as you hold it past the date of record, which we're going to take a look at that also. Okay, so there's 76 companies today. Let's take a look and see what we're looking at. Let's bring this all the way up here. Some of these over here, you may notice some of the names, you may not. There's Dell Computer right there. Let's slide down and see if we can recognize any other ones. HD, Home Depot, Kellogg's, MCD, McDonald's, which is Six Flags. I really don't recognize any of them off the top of my head. But anyway, there's 76. Now, what I did just for the fun of it, because 76 is a lot to go through for this quick little exercise, I went off the highest dividends, and I took, I believe, the top 15, and I plugged them into my calculator. All right, the top 14, plugged them into my calculator. And this is what they stand for. This is how they stand on the dividend capturing strategy. CMP came in number 1, so on and so forth, way down the line. ABA came in the bottom. Now, if you wanted to use the double dividend strategy, just double click on this, and we have GS as being number 1, MLM being number 2. Dividend on steroids. GS again came in for number 1. The yield's not the greatest, so I'm not 100% sure if I'd do this one or not. It does have options. Its 20-day moving average is 1.26%, so let's quickly see what that is. On a $166 stock, multiply 1.26. Oops, clear. Backwards. 1.26. It's about a $2 move every day. That's not bad considering that the dividend is only 65 cents. That's pretty cool. All right, 90%. This is all in the high 90s. This is what I may do. I may overlook this 1.26%. I may overlook the 1.57% yield because it's so high here. Okay, so this is just one software. There's a lot more to it than just, hey, the software says this, let's buy it. No. Let's take a look at the other software and see how all these fall in, because we have 4 strategies to choose from, and finding which is the best strategy is what it's all about. Okay, took these exact same 14 stocks and plugged them into this software. Now let's take a look at some of these numbers and see how they came out. Right off the top of the bat, Six Flags only has 5 years worth of data. Okay, so it'd be totally up to you whether or not you want to trade it or not, but I usually say no to that. Now, CMP only has 400,000 shares trading on an average volume. So I usually say no to that. I like to have 500,000 shares. And with that being said, we can get rid of Val. We can get rid of Pope, because Pope only has 1,600. We can get rid of SAFT, S-A-F-T, it only has 57,000. And AVA only has 300,000. Okay, so that's it for volume. MLM, we can get rid of MLM. Has good volume, but look at the yield. The yield is only 0.8%. No thanks. Now, I also like to stick with stocks that are less than $100. unless there's a huge reason why I should be sticking with them. The limited, McDonald's and Home Depot, all big name companies. Most likely going to stick with those. I'll look at GS for a second. GS has a 1.57 yield, and it's over 165, so I'm not really liking that one. Now, we've just cut it down to 5. No, wait a minute, that's 6, sorry. 6 companies, so let's take a look at what else is out there. I don't really like these zeros right here on Kellogg, but Kellogg is a big, huge company, so I may be willing to overlook that. So let's take a look at the charts and see what the charts say over the last 10 years. Okay, so if I bought this stock 10 years ago, what would it have looked like? Polaris. Now, you've heard of Polaris. I don't even know what they make, but Polaris is a well-known company. A lot of people know that one. So 10 years worth of data on Polaris. I like this. Look at this. 10 years ago, it was way down here, 25 bucks. Now it's up to 50. So Polaris we'll stick Polaris. Kellogg. Let's take a look at what Kellogg looks like. Now, the reason why we're looking at 10 years worth of data, because if we're going to get stuck with it, I want to make sure 5 or 10 years from now, it's going to be another good buy. Now, look at this. This is another good one. 10 years ago, she was way down here, below 50, 49, and now she's up at 83. Okay, so that 10-year chart looks good, too. Okay, get rid of that. Okay, so we like Polaris, and we like Kellogg. Let's take a look at Home Depot. Now, Home Depot, everybody knows of Home Depot. They've been around for quite a while. Definite no-brainer. Take a look at that one. Way down here, 37. Now it's 135. That is a definite. This one is taking the top of my list so far. I like that growth that they have in Home Depot. Is very good company so far. MTB, 2.38% yield. Let's see what they look like. M&T Bank Corporation. I usually don't like banks because they usually don't have any steady growth. And there you go. Look at that. 10 years ago, it was way up here, over 100. Come on, move up. 122 10 years ago. Now it's down to 118. So, bye-bye MTB. Even though MTB looks good on the chart. See right here, look at this. 117, 2.38%, under 100,000, over $100. No thanks, the chart don't look too good. Okay, LMT, let's take a look at that chart. Lockheed Martin. I thought it was a limited, but no, it's Lockheed Martin. Ooh, big company. And another no-brainer. They're going to be in contending with Home Depot. 86 bucks 10 years ago. Now it's up to 244. That's my 2 picks so far. Home Depot and Lockheed Martin. And McDonald's. Let's take a look at McDonald's. 3.11%. And see what they look like 10 years ago. Another one. Oh my goodness, look at this one. Okay, so this was... Oh, catch up. Does that say 39? Yep, 39, and now it's 115. So this is my top 3 picks. So let's get out of there. We're looking at McDonald's, Lockheed Martin, and Home Depot, right? Alright, so Kellogg was okay. Wasn't the greatest. Polaris, that was okay. But these 3 right here, great growth. Great, what do you call it? The 10-year growth, paying a good dividend, nice volume, and so nice everything so far. So these 3, McDonald's, Limited, Home Depot. Now, one thing that we don't have here is the ability to eliminate one at a time. MCD. And Home Depot. One thing about this software is I can't take them away. All I can do is just rerun it, which is those 3 that we're looking at. Okay. So I'm not really going to look at the dividend because I'm just going to look at the yield Okay, so far the top contender is McDonald's. They have 3.11% yield. Its moving average is only 0.9. So let's take a quick look at that. At $114, multiply 0.93%. It's going to move about a buck. Okay, so that's right in the spot, you know, because 89 cents is the dividend, so that looks good. Lockheed Martin, it moves 1.2. I don't even have to look at that. 1.5%. It's going to be like a $3 or $4 move. 134, 1.8. That's going to be like a $1.50 move. So if they all work on that, now McDonald's got a 97. Lockheed Martin's got a 95. Options. Double dividends, no. Dividends on steroids, no. So let's look at Home Depot and see what they say. Dividends on steroids, look at that, 80% of the time. Waiting for the calculations to come up with the double dividends and then the dividend capturing strategy. And that'll give us an idea of what we're looking at, or who we want to be on the top of our list. I'm pretty sure it's going to be Home Depot. Double dividends 78% of the time, and I'm pretty sure this is going to be somewhere in the high 90s. Okay, right. So that's my choice right there. Number one choice would be Home Depot. Its price is a little higher than I like. The yield is over 2%. The move is automatically sets up to the best choice. That's lovely. Okay, so as I was 135, it's a little bit higher than I want. The yield of the dividend's okay. The yield is over 2%, which I like. The movement is 1.1%, 1.18%, which is, like I say, probably somewhere right around $1.30, $1.40, somewhere in that area. Dividend on steroids 80% of the time, so I'm going to shoot for that. Double dividend 78, and dividend capturing 92% of the times, and it does have options. So that's the one I would have chosen. So let's see what it actually did by going here. Home Depot. Okay, now let's look at the last 10 days. Okay, it's at 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, so had I bought Home Depot at the opening 10 days ago, right? 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, the opening, let's move this up a little bit. Get rid of that last one. Come on. There we go. Okay, so the opening price was $137.65. Okay, whoops. Okay, look at these numbers right here. Okay, the high was 138.65. 138.65. Then we want to subtract the opening of the day, which was 137.65. I don't even need a calculator for this one. 137. 65 equals a buck. So if you bought it at the opening, it would have been 137.65, give or take. The high of the day was 138.65. Okay, and what were we looking at? We were looking at Home Depot. Where is Home Depot? Right here. Okay. The dividend 69. They announced it on the 18th. Today being the 8:30. Date of record is 9/1, which is 2 days from today. Had I bought it 10 days ago, I would have collected the 69 cents on the very same day and been out. Okay, it wouldn't have to hold it for the 10 days. However, if I did hold it for the 10 days, I'd be looking to sell it for $137.66 or $137.67. Okay, collect the dividend and a little bit extra on top of it. Even though the stock did trend down from the opening of the day, right? It is the high of the day. That is why we use the trigger trade. The trigger trade allows us to get in, preset our exit point, so you can actually be out in less than 2 or 3 minutes if the situation occurs. The fastest trade I have ever been out of, I think, was 37 seconds. You know, the opening of the day, it shot up. I was out within 37 seconds. The stock dropped back down. Really irrelevant because I hit my stock price. I hit my stock target price within 37 seconds. That was cool. Home Depot, I really couldn't tell you when that hit that day. I'm not sure if we could or not. I'm not sure. Anyway, I don't, not really. How to use this? Go back to normal. I don't know how to use any of this stuff. Anyway, this is James from 10-Minute Trader. You guys have a great day. I'm going to play with this a little bit more to see what else I'm looking at. And look for our next video. Anyway, this is James. Have a great day.